Hello there, my friends. Chris Marcus here with you on the StockPulse Network on Tuesday, September 25th. And a quick video, just a little bit of a preview about the Fed's meeting this week. Again, it's widely expected that the Fed is going to raise rates again, which I do expect will happen. And perhaps just digging in a little bit to what that will mean, why there is, in a sense, a lot hinging on this move. Primarily because you've seen, as rates have started going up, slowdown in the real estate market. Obviously, we have not seen that yet as in the stock markets, which continue to hit record highs almost by the day. But still, you can think back to what happened following the 1 year of 1% interest rates Alan Greenspan had back in 2004. I think it was 2003 to 2004. Then when they began raising interest rates in the summer of 2004, you saw really the beginning of the end of the housing bubble as rates continued to go up. So that's why it's been fascinating to watch, to see how they'll handle this, because really the past decade of policy has put the Fed in this corner where, on one hand, certainly you leave rates at 0%, continue doing quantitative easing, and that puts some real strain on the currency. Yet, on the other hand, now you've built up these bubbles, and as the rates go up, that puts more pressure on the bubble, which creates another type of outcome that isn't ideal either. In my own personal opinion, I feel that the Fed is, in a sense, past a point of no return, where through decades of policy that I would not advocate, shall we say, it's been pushed into this situation where now, even if you do try and unwind the stimulus, I do believe that will take down the bubbles. I'd also say that's a consensus view in the precious metals and Austrian economics community. So it's certainly going to be interesting to see what they do. Also, the wording with the statement. You can see here, government debt yields have been rising. It looks like got as high as 3.11% today. And certainly most in the market are expecting the Fed to hike, which I do believe they'll do. Although it was interesting, as I was just taking a little snippet of what folks are out there saying. Article here on CNBC. Handful of traders actually think the Fed could hike a half point this week, which I'd be a little surprised by that. Again, there is a way that you can back out these percentages from the Fed fund futures markets, and CNBC reporting that basically pricing in an 8% chance of a half point hike. So certainly not as if it's being priced in as a favorite, but wow, if the Fed did raise a half point tomorrow, it would be interesting to see how bond yields respond to that. Certainly, if the Fed's going to raise a half point tomorrow, I would think that that would mean it would be almost the Fed saying it's a guarantee that there's going to be another hike in December. And if you raise a half point here, I don't know, do you begin to expect a half point in December? Should that happen, that would put incredible pressure on these markets, because again, I like thinking about that example of what happened with the last crisis, because there you had a year of 1% interest rates. Now you've had a decade of near 0%. Okay, the last year 1%, 1.5%. So really, if the Fed is going to be that aggressive, that would certainly lead me to think that some of these bubbles will be experiencing trouble sooner than later. Certainly, we will see how it goes. And as has been saying in the wrap up and also this video, just entire eyes of the market on the Fed tomorrow, and check back in. We'll have that covered and more in the market brief. So thanks for watching.